Hello, this is Tom Cloud with this week's Precious Metals Market Update. Several things to answer that have come in that are not directly related to gold and silver, but certainly to the investment world. I've had numerous calls and emails wanting to know if I could explain to them why they got letters from people like Vanguard, TIA Cref, Schwab Institutional, saying that their money markets this coming Friday would be switched from commercial paper money markets to government securities or treasury bill money markets. And certainly we all know that nothing good can come from this. It's basically, in my opinion, when you look at the demand out there as people try to liquidate treasuries, very few people are bidding on them. I mean, we're looking at a crash that's coming. It's going to be the biggest crash of all is going to be the bond market when interest rates start up. And you take a 35-year bull market of bonds since 1981 when interest rates were peaking out in the 14 to 18% area based on what interest rates were for. And now we've got interest rates below at 0.5%. And we know that's going to change. And when it does, bonds are going to be liquidated. So Obama forces you to put your money that's in the money market, not in stocks, not in bonds, but in your money market, are going to be shifted at 4 o'clock this coming Friday into a treasury bill money market. So you think of it, well, why they do that? They need to have money coming in to buy treasuries when they're rolling over and nobody wants to buy them and auctions are not met. So here comes a big pool of money of billions and billions and billions of dollars that will now be forced into the treasury market. But what does it do on the other side to the companies that are using commercial paper? And commercial paper, for those that don't know it, is nothing but it's a loan to credit-worthy participants. So let's say a major corporation doesn't want to go through collateral. They want to use their good reputation just to borrow money for 6 months or a year. They go in and buy commercial paper. And it's a very low interest rate, but it's higher than treasury bills. So they pay a little more. And then all of a sudden now we see that these people are going to have to borrow money elsewhere. They can still go to personal brokerage accounts. Those aren't affected yet, but should be in the future almost guaranteed. So they go and borrow there, but then there's not enough. So now they have to go into the regular borrowing arena, pay higher rates, put up collateral, and what's that going to do to the economy? What's that going to do to these corporations that use commercial paper? It's not going to be good. It's going to be a bad thing for us in our economy. So that's the answer to all of you. And I do appreciate the emails and calls asking, and I promise to answer this week on Jerry's video. So that is the answer. We don't have an update on the gold holdings by China to get their SDRs. We're still only a week and 2 days away. So certainly we'll know by the end of this week or next week. As I record this, the FOMC, Federal Open Market Committee, is meeting. So the Fed, the Federal Reserve, is meeting, and also the Bank of Japan is meeting. Both these could create something very big in the next few days. So we want to talk about that. The other thing that is really starting to come is we're starting to see people shorting gold and silver go away. It's very similar to what happened all the way back in 2000 when gold was shorted for a decade, and then all of a sudden these people shorting gold, wanting to make money on it going down, all moved to the long side. And for 12 years, from 2000 to 2012, we saw gold go from $256 to over $1,800 an ounce. Now with gold in the 13, 15, basically in there, we're seeing the shorts disappear. We think we're getting poised for the next big move in gold. And there's numerous things I could spend to tell you why I believe that. But basically, we see the shorts going down. This year, gold is up 24%, even with shorting of gold going on. So now we're seeing central banks buying gold, and we think we're going to see these people going long as early as next week or even this week if announcement came out about the gold reserves held by the Chinese as they move into having special drawing rights on October the 1st. So watch that disappear. And lastly, I want to talk about the meeting earlier in the week of Obama bringing in the Boehner and others and saying we're going to raise the debt ceiling and we're not going to go to Congress and Senate. We're going to just do it right here, right now. And once again, they did it, and they moved it to $21 trillion. The Congress didn't vote on it. They just gave Obama the right to do it. But just think, a president in 8 years has doubled the debt, and he's patting himself on the back for absolutely nothing that he's done. And yet, here we're seeing forecasts on Hillary's economics and Trump's economics. Some say it would take Trump's economics 5 or 6 years to double after seven years for Obama. And Hillary, they're saying 8. It would only take like 4 years for the debt to double again if Hillary's economic policies were to go in. So it's very scary any way you look at it. But here's what I can tell you is you're going to miss the boat if you don't buy gold and silver. You can't wait to when every central bank in the world wants it and every major investor wants it. By then, you're going to pay premiums you will not comprehend. Now, I try to stay centered and focused and not get excited about where this thing's going. But it's impossible right now when you know what I know from 40 years experience, talking to people I'm talking to in the wholesale business and hearing the kind of questions they're getting about tens of millions of dollars in orders where the physical metal's not out there. You can go to ETF, it's paper, it's not real. You want the real gold, whether you store it at home or whether you store it in the facility I've arranged for you, the COMEX warehouse at IDS in Delaware or Toronto. But people, if you wait too long, I will promise you, you'll want to buy it and you're going to pay a lot more price, not only the spot price, but the premium, and you're going to be chasing the big money that's going to buy it. The same thing that we saw drive it 5.5 times from 2000 to 2012, you're getting ready to see again. I promise you from the bottom of my heart that you need to be moving. I'm putting every single, and I will have every single dollar I can get my hands on in the physical gold and silver. It doesn't mean I take delivery, I put an account. But I can tell you, I'm getting ready to make an announcement probably in the next few weeks that you won't believe. You'll hear me say something you never would thought you would have heard me say. But anyway, time is of the essence. Things are moving in biblical scripture very quickly. I've told you many times, the Christian pastors I have, the ministries that are 30, 40 ministries I deal with, helping them secure money when they have it to invest, they're getting very uncomfortable. I cannot tell you the number of calls I've had where they have felt led to call and place orders in gold and silver. So things are beginning to crack, in my opinion, and that will accelerate dramatically over the next few days, weeks, and months. And it's time to get positioned. If you need to talk to us, just ask questions. You can reach us at 800-247-2812. That's 800-247-2812. And Dan, Kathleen, or I'll be happy to discuss your questions. And if you don't have a self-directed precious metals IRA and you're interested, we'll walk you through how you can have personal IRA and gold and silver and actually have the gold and silver stored in a bonded warehouse. So anyway, hopefully we've stirred up some questions, and we've got a lot of information coming to you soon, so keep your eyes open. With this week's Precious Metals Market Update, this is Tom Cloud signing out.